Hello YouTube! Today we're going to be talking about the bears and how they are reclaiming short-term control. How do we notice that? We notice it by being below the green line, which is my level of support. We note that we fell back inside our gap. We fell back below 400. We printed a daily lower low, and we printed a daily lower high. We opened today and gapped up and flushed. That is the opposite of a gap down pump up. We are closing at roughly 398. And that level is going to be quite important when we look to the options chain a little bit later in the show. I would also note that QQQ, or the Qs, are already below the 50 DMA. So the reason why this is so important to me is because, as a rule of thumb, if we're going to print 2 consecutive daily closes below the moving average, for me that signifies that the level is getting lost. Yesterday, the 50 MA was at 304.18. Today we're closing, we closed at 304.41, which means that we saved it by about 20 cents. Today, we did not. So today is the first day we have closed below the 50 DMA for both the Qs and for SPY. So if tomorrow we also get it, what would that mean? It would mean that potentially what we laid out on the weekend in regards to this being a repeat of 2008 could be well underway. I'm also trying to find where the dominant uptrend is here. And when I look at it, I'm like, okay, well, this is broken. We are below the green line on the weekly as well, which means that we're down below the area I would say is support. We now filled the 400.67 gap, and we just faded. It's also really notable where we're going to be tomorrow. Why? Well, tomorrow is going to be the end of the month. With it being the end of the month, when we connect our psychology chart here, which we've been reviewing, again, we reviewed it on the weekend extensively. When I look here, it's like, okay, well, if we're going to go up, we have to pretty much start doing it right now. I think that the market is now starting to finally believe that what the Fed's going to do is take us down. We're down by 3.3 on the month. Normally we are down by about 1% in August, 1% in September. So what's really important for me going into tomorrow is going to be where we end up getting the low. And I say that because our low of the month is today's low at 396.00. So this is important because if we noted that closing below, last week closing at the low of the week, which we have for the last 2 weeks in a row now, what did that lead to? It led to a move down. We gap down, pump up, fade. So we filled this gap 2 weeks ago, also filled the gap yesterday as it was moving. So yes, that's the reason why there was no video yesterday. Anyways, if we now look, okay, well, if the pattern is repeating, and we note that gap down, pump up the start of the week, flush it, closing at the low of the week, well, this week we're only down by about 1.7. That's right, only 1.7. We're definitely getting bearish continuation. So what I want to look at here is just try to understand. Again, not tell the market what it's doing, but try to understand it. So yesterday we had a doji, which means that yesterday the market was like, okay, well, I priced everything in. I filled the gap on the daily, filled it on the weekly, and now I'm closing basically where I opened. Open at 402, close at 402.6. So closing within 0.1% of each other. What do I note on the daily as well? Because again, I wasn't here yesterday. I'm trying to understand. The red volume. That is correct. The red volume is back. These bears are flexing and they are taking control. So again, I know I've bounced around quite a bit. I think I laid my notes out extensively on the weekend. I really appreciate everyone who smashed a thumbs up and dropped a comment. I really appreciate all of you. So what's really important is that tomorrow is going to be just another day for the weekly, but tomorrow is the close of the month. So that level we looked at on the monthly is going to be very important. But the weekly chart here tells us that if we're not able to start rallying back up here, we're due to fade, right? We're due to go down. Looking at the Qs as well, this is really significant because this is more than just a backtest now. We note that we're now right around that psychological 300. We are back below our bear market level. We are back below 323, which is 20% off the lows. And we're now just battling for the high we were at in August of 2020. 300, basically. And we're throttling it, right? We're really rocking it. Kashkari today said that, hey, I was happy to see what the market did in reaction to Powell's speech, which means they do actually pay attention to stocks in the stock market, even though they don't always say that. Joe Biden also mentioned that he's going to be running for a second term. I don't know if that's bullish or bearish. I'm not here to comment about that. I'm here to look at lines and charts. So to tie this all together, what I'm really looking at is the round numbers. And what I mentioned for if it's 2018, what should be happening, 2008, we should go all the way down to the black line, lose it, dead cat bounce, and then that is it. That would be our confirmation here. And when I went through, I explained the reasons why I'm bearish, and I explained that our algorithm has also predicted it. So as long as the path of least resistance remains down, technically, as we get closer to Labor Day, again, sell in May and go away and come back on Labor Day. So May here closed out at 413. And again, if we understand the perspective here, closing at 412, being down here roughly, I don't know, about 398, that's about 4%. That's right. May, all the way till now. Sell in May and go away and come back on Labor Day. That's the saying. Here we go, right? We're down by about 15 points, or just under 4%. It's not really all that much, all things considered. We went into a bear market, and we just managed to puke up all of our gains. So I think I've made things very clear. Now, what I'm going to do is have a look at the chain in a moment, but and more importantly, what I try to do when I come back to my desk is not try to tell the market, is it doing what I want? What I try to look for is, can I understand what it's telling me? So if now we flip here to a line chart, the three charts I was really paying close attention to were SPY for the psychology chart. And again, noting here that my base case, not again my guarantee, I can't give you a Justin guarantee. I'm just a guy on YouTube. I think we're going to coil up into here, and then we're going to lose this into the beginning part of the year. Doesn't mean that's going to happen. This would be a bear market rally inside of a bear trend. So we really have to pay close attention to that. Next thing was ARC. So looking on the line chart here, well, we're pretty much back to the green line at 41.2s. We're here at 41.8. Hey, it tells us we really shouldn't be going much lower. Can we carve out a bottom? We're down 7% on the week here. Woof, right? But it didn't really do anything today. It got most of its damage out of the way yesterday. Oh, sorry, this is the monthly. Let's go to the weekly. My bad. On the week, we're down by 2%. All things considered, it kind of makes sense. Why? Well, it's already down by 80. So right back to the green line. It's kind of doing what I would expect. Last one we looked at here was Bitcoin, and whether or not it is holding the 20K. As of right now, it's at 19,900. Where is that? That's right around 20. That looks like a liquidity grab. The other thing which is very notable to me is that every ETF is red, including utilities, including energy. It is all down, all down. We look here to, the options. We look at the put-call ratio for the S&P. It's pretty high. It's at 1.6, but the broader market is at 1.09. So it's definitely still skewed a little bit bearish, but we notice that it's kind of concentrated here in S&P. Every $1 trillion company is red, crypto down, and what else have we got here? Oil down, gold down, right? Everything down. The market's really believing the Fed. What's the theme of what is higher? The dollar. So let's look at the dollar here. Oh my goodness. What did it print? Another high. 109.29 was our high. We got 109.47. It just continues to grind higher. So the US is not doing super great. It's that everyone else is doing kind of bad. But the data today showed us that, the consumer confidence is actually quite high, which means that as gasoline prices went down, the Fed's fear of creating a hard landing is, again, starting to get some people who were saying, hey, maybe they can actually do it. We're back above 100, which means that is more confidence than the previous month. So that's good. And there's also roughly another, 800,000 jobs that are here as well. So as they continue to hike, there's even more job openings. The data print coming in on Friday, or Payroll Friday, will be especially important. But we pivoted right at 10. And what happened? Oh, baby, we went down. Other thing to look at here is going to be the VIX. The VIX over 25. Again, Chris Kelly on Bloomberg today said that VIX at roughly 25, 26 implies a roughly 1.25% move on the day. So I'm just going to put the text here as a reminder to myself too. So VIX over 25, right? Roughly 25 is equal to, man, I can't type today, is equal to a 1.25% daily move. That's right, every day. So as we look at the chain, this will be especially important because what did S&P do? It closed down by 1.1%. QQQ closed down by 1.1%. Yes, and the last thing to look at before the chain is just the round numbers. So what do we got? SPY basically at 400, right? 398.5. What do we got? QQQ, 1 point over 300. We got ES at roughly 4K. The NAS at roughly 12,500. We got oil at 92. We got BTC at 20K. ETH at 15. And with all these splits, all these $1 trillion companies are between 100 and about 270 now. So we have to pay attention to these round numbers. 100, 150, those are big numbers. And then that's pretty much it. Okay, so now let's see, because again, sell in May and go away and come back on Labor Day. So is there option motivation for these bulls or bears as we get into not just the end of the week, but into next month? So let's look here at today's chain because it was busy. And normally I don't like looking as much at the options, but because we're in a low volume environment or the summer doldrums, there's more volume happening on the chain or more dollars flowing in options. So we really have to pay attention to it. Because what we went through on the Friday stream was noticing that what they'll often do is they will fade the stock, fade S&P down, jack it up like a jackhammer, and then fade it again, jackhammer it up, fade it again, jackhammer it up, fade it down. And that's just because they're scraping the chain here. There's hundreds of thousands of options that are trading. So the maximum pain area is 400 because below 400, everything gets smoked for tomorrow. And again, max pain does not mean that's where we're going to close. It just means if option sellers are in control, again, the Goldman Sachs, the Morgan Stanleys, if they're in control, they're gonna want to get it back up to 400. And then on the call side, right, everything here pretty much gets smoked too. So everything here goes bye-bye, and everything below here goes bye-bye. But closing at roughly 398, what I want to look at instead is going to be the options here, because right now we're getting a $2, right? $2 for puts, $2 for calls, which implies a right, let's call it about 2.2 divided by 398. It's implying about a 0.5% move, when the VIX at 25 implies a 1.25% move. So is there a mispricing here? I don't know. These bears want it down. They got the open interest. They got it at 400. They got it at 398. Where did we close? 398. And they got it at 395. That's correct. Looking on the call side, it's pretty soft on the open interest here. We note that 405 to 400 is the area the bulls wanted at, with volume really picking up at 398. It's almost like these option sellers are in control. That is correct. So again, are we going to go back to 400? Are we going to fade to 395? I think it's really going to depend on what happens going into again, that payroll number. And positive number, what reaction? Well, good data should be interpreted as bad. So if we get a green print on payroll Friday, meaning it's higher or it's green, what should stocks do? They should go down. So is that, with that being the most important data point, and Jerome Powell telling us that it is the totality of the data was the words that he used. Totality of the data means that he can pick and choose what he wants to say is going to be his narrative. Consumer confidence coming in. I know they were watching that. It beat. So he's being told, hey, if you want to go 75, baby, do it. And right now, I think being dovish is 50 basis points. 75 is going to be hawkish. And we talked about what that means in terms of the terminal rate, or where the Fed is going to stop hiking interest rates. The market still has more work to do if we're going to believe the Fed is truly going to do this. When I look to Friday, September 2nd, what I'm noticing is that we're getting continuation here, 400 to 395 with that same open interest. However, the open interest is really plugged up here at 400, and we got about 450 in premium, which means that we have to be at basically 395 for these 400s to get their money back. So if we close at 400, that would be maximum pain. That's where the most premium gets burnt. If you buy options, you're like, man, mine went to zero. Yep, that's options burn, where they're trying to burn the value of those options. If the option buyers are in control, we should close at least at 395. And what does that do? It means that we're going to likely be printing a lower low. We're going to be having multiple days below the 50 DMA. And the trajectory to get all the way down to that 200 DMA seems a lot more likely, because this open interest is jacked up on every expiry post here. Notably, if we look at the monthly for September, do we see the same thing we do on these other ones? That's the big question. So again, now that we understand technically, fundamentally, where we should be going, is there the cherry on top for the people who trade a lot of options? What do we got here? 400 to 405 for the bulls. We're looking at September 16th, or the monthly 16s. And all it means is that we're not looking at anything below 391 or anything above 406. The 16s is what's most likely, more probable to hit. And again, what do we note? 400 is still max pain, but they got about $8 in premium on both sides now, right? About $15 for a straddle. So where's the volume? Oh no, it's the bears. That's right, it's the bears. They got a jackload of puts here at 400 open interest. They got 50K in volume, and it continues down to those same strikes. 398, not really, but 395. Yep. roughly 55 OI, 40,000 in volume. And then we even have it here down to 393 for volume. So I'm noticing exactly what I would expect if we were going to get bearish continuation. Is it enough for us to repeat 2008? I encourage you to watch the video that'll come up here in a moment if you want to know my deeper thoughts. And this is going to be my roadmap for the rest of the year. If we do not reclaim that 50 DMA and we start fading towards the 200 weekly, it is looking like we are starting to repeat a deep, dark winter. Thank you for watching. Look forward to seeing you tomorrow. Thanks.